Hi, I'm James Brookes, and welcome to From the Factory Floor, a conversational podcast about all things startup and tech, brought to you by the folks at tsf.tech.
Thank you, everyone, and welcome to episode 26 of From the Factory Floor. Obviously, last week we spoke to Mike from Nevo, who has been through fintech and with Nevo, surprisingly enough, and has also done a series of fundraising. So this week, we thought we'd dive a little bit deeper into what due diligence is around fundraising. And to do that, Ian and I are very kindly joined by Gavin from Maven. Hi, Gavin.
Hi, everyone. Yeah, very pleased to join you today. I've listened to a few of your podcasts. I think they're great. So, yeah, delighted to be invited on.
We always like positive feedback. And obviously, Ian has joined us as well, as ever.
Yeah, morning. Looking forward to this. Due diligence is a really important part of the startup founder journey. And I guess we've seen it from both perspectives. I've been on the side of Gavin in terms of the investor and what they look for, and equally as a founder myself, kind of that introspection and audit and review and look at the drain pipes. And it's an interesting process. But I think, I'm looking forward to some of Gavin's thoughts, really, and kind of any anecdotes you've got, Gavin, from your experience as well, as to where the key points from an investor point of view. And I'll kind of chip in and kind of say, from a founder perspective, these are the learning points as well.
So I think just before that, Gavin, do you want to just do a quick 2-minute introduction to yourself, who you are, where you're from?
Gavin Bell, investor at Maven Capital Partners. So Maven are a UK-wide investment firm, private equity firm, and venture capital, multi-stage investor. I'm based in the Manchester office. I've been at Maven about 5 years, but been in private equity and venture capital itself for about 15 years. So I'll really give you my views from that time in the industry. So just to do the kind of legal disclaimers at the start, these are not necessarily the views of Maven Capital Partners. This is what I've seen in the industry. And to be honest, due diligence and fundraising, it's very similar at every firm, really. A little bit of a hospital pass on the subject today. We'll try and make it as interesting as possible.
It's funny, Gavin. It's funny you kind of refer it in that tone, really, because I think it is one of those pieces of hard work that are underestimated by founders, and first-time founders, especially, who've got no corporate experience or investment experience, don't really realise what they let themselves in for. I think it is a bit of a deep dive and a bit of a shock, and it's kind of it's kind of a bit of a dry subject, but I think that the founders can learn an awful lot from it. Anyway, I wasn't going to say much on this. I was going to let you do all the talking. I'll shut up.
We've gone into some of these processes sometimes, and the founders are filled with trepidation. They come out the other side and they said, actually, your advisors are really great that we've met, and they can really help us on the other side as well. So not just a tick box exercise, it's about understanding the business and spending time with the people in that business as much as anything. So people are normally pleasantly surprised, I think, with how the process is run in these kind of things.
So usually when it comes to obviously going through a fundraise, obviously more from your experience and someone who's not necessarily done one before, going for sort of their first round, what's actually involved in going through a fundraise? Obviously, I know we're going to go a bit more into the DD aspect, but what do you guys actually look for when someone comes in with an idea for and wanting some investment?
Yeah, the starting point is normally we get a pitch deck, which gives us an overview of the business as a starting point. Then, if we like what we see in the pitch deck, we tend to set up a call or a face-to-face meeting, find out a bit more about the business. Or sometimes we'll dive straight in and just have that meeting straight away without the pitch deck. It just varies. So we might just go for a coffee first of all. But it is just that. It's just understanding the business. And I think for it to be interesting for an investor, what does it need? It needs to have something slightly different, doesn't it? A bit of USP. It needs to be scalable. So not a lifestyle business as such. The people need to want want to work with an investor as well. It's a partnership. So it's all of those things, really. The approach is different for different types of businesses, I should say, as well. So we don't just invest in tech at Maven. And over my time in the industry, I've invested in lots of different industries, not just tech. But like any other investor, we're doing a lot of tech investments at the moment. We've got a post-seed Series A fund in the Northwest called the Northern Powerhouse Fund. So yeah, we do look at a lot of tech investments.
Those kind of first three bullet points, looking for the USP, looking for the scaling potential, and looking for the founder with a mindset to kind of work in a partnering approach. I think they're the very positive things you look for. How's this business going to grow? Where can it go? But again, underlying that, the kind of the role of a due diligence exercise is to some kind of systematic way to analyse and mitigate the risk in the investment decision. And that's, again, I think what we've looked at from a tech point of view. It's looking under the bonnet at quite a level of detail. But yeah, I really like the opening comment there in terms of, that partnership approach, because an investment is a partnering approach and they're open-minded to that. And they've got to be open-minded to the needs and requirements of an investor, which obviously you then start through unpacking through the DD process.
Yeah. And before we get into the DD process, we tend to have a handful of meetings already. Sometimes it's only one meeting, but we tend to have a handful of meetings before that. And when we get into the proper due diligence, as it were, that's normally the exciting bit, because that means that we've issued heads of terms, we've signed something to sort of step forward with a view to doing a deal. So yeah, the due diligence is the start of the exciting bit, because it means it's potentially going somewhere, and most of them go through to completion. To be honest, it's a very high percentage, because we'll have done that work up front as well. We will have spent the time, like I said, having the coffees with the founders, understanding things. Once you get into due diligence, we might bring in external consultants as well. We might do some of that before we get into formal process as well. We might have conversations with people in our network about this particular industry, for instance. But yeah, once we get into a formal due diligence process, we might use a mixture of external consultants, but we do a lot of the due diligence in-house as well ourselves. But yeah, it's really open-ended. Like I say, it depends on the type of business you're looking at, but it can be that tick box of checking contracts are in place, for instance, with customers that the founders have told us that they already have. Are those contracts in place? What those contracts look like, just going through the detail. But equally, it can be more subjective. It could be looking at the sales process. And as you said, it could be looking under the bonnet more at the tech. So obviously, if for a tech business, the due diligence will lean towards looking under the bonnet at the architecture. Will it scale? What's the CTO like? Can he be part of something that's going to be a big business? So it's multifaceted. There's not one prescription for each. Due diligence is different. You're focusing on different areas. When we talk about scalability, we'll look to understand the revenue model. So how do you charge your customers? Is it a subscription model? Do you get money for a transactional model, for instance? Because investors, they like that recurring revenue stream. You like to be in businesses where on day one you're not looking to build a customer base from nothing each month. You want that recurring customer base, and obviously a low churn, hopefully, and then you just keep adding to that. That's the model that investors like, really. And I'm no different.
Quite interesting, Gavin. You kind of set me thinking there, a couple of comments you made. So, you spent 15 years in this. So you've obviously got a lot of experience. You've seen a lot of people come through the door. You've obviously drunk a lot of coffee. And it starts off with being very judgmental and subjective and gut feeling, doesn't it? We're no different. When people come and rock up at the door at TSF in Manchester Technology Centre and say, I've got an idea, can you help me build this thing? You're quickly assessing the attributes of the individual, their idea? Is it exciting? Is it challenging? Have they thought it through? And I think people kind of need to understand we're all emotional decision makers at the end of the day, but you do need some kind of factual stuff underpinning that. We get loads of people who literally had one a couple of weeks ago that says, I've got the next Google. And of course your ears pick up, but there isn't much depth to a lot of those things. So yeah, I was just intrigued as to when you're having that first coffee, what are the two or three things that are the essence of? Is it the likability of the individual? Is it the clarity of the vision? Is it how they, create connection with you? On that coffee, what do you look for, and what makes you go, do you know what? I have a hunch there's something here.
Yeah, I suppose subconsciously my brain's probably picking those things up, and I've not contextualized it into what I'm looking for, and then it goes back to a gut feel, like you say. But I think it's things like being able to describe the business and the key parts of the business just really nicely and concisely without just diving into too much detail and waffle. I think that really helps. And then just getting a feel for how they've built the business from the start, how they've done that, because it's going to be a long journey. So can this person stay the course? Is he resilient? Can he sell? Sorry, I should say can he or she sell? Just being able to convey concisely, and also to convey the vision of where this business is going and why it's different and why there's a need in the market, and how you will protect that position. What will be your position in the market? How you'll protect that and build that over time? Will that be because you work with local customers first of all before you start expanding nationally? You have those deep relationships.
Yeah, I think it's some really good points there, Gavin. And I think one of my takeaways for any startup founder is be prepared. The due diligence process starts on that first coffee. You are presenting yourself, you're presenting the vision. Use the word clarity. I really like that. Be able to give a succinct, high-level view, why we're different, how we're going to sustain advantage, but in a conversational way. Because I think one of the things I look for is compatibility in terms of, can I work with these folk? And often with a founder duo and the coffee session, it's kind of, you're looking to your left, looking to your right. The level of engagement is there, the enthusiasm is there, but the clarity of communication is there. Because what I take away from that is that they can sell their proposition and their product to their first customers. So that's one of the key things. It's a great idea. Yes, we can build the tech, but can they sell it? And I think that's a really important acid test. We have lots of people with lots of great ideas, but you think, do you actually know what a customer looks like, why they buy, what's the pain point you're solving? So any first-time founder listening to this podcast, it's, you are selling yourself, and you're selling your relationship and your ability to communicate. And at the end of the day, Gavin, you're making an investment in them as an individual as well. So the business idea and the veracity of the idea and all the stuff we do on when we get the experts in to look at the tech or the commercials and the financials, but it's about the investment in the individual. Is this individual investable? Is one of the acid tests we have. And when folk come into us, that's one of the key things. Not saying you want to go on holiday with all your investees, but you've got to be able to get on with them and have a good structured conversation. So that clarity of the relationship, I think, is key.
Totally agree. And I think you've got to feel the enthusiasm and that they live and breathe this, and they will be able to go through the difficult times because that belief is just so strong that they can build something. Almost need to be a bit delusional sometimes. That you need to be a bit like that, I think, as a founder, because otherwise you probably just slot into a normal job, and this isn't a normal job. So I think there's many founders of big businesses who might have started out sounding a little bit delusional, but if you got the substance to back it up.
We did a podcast a couple of weeks ago talking about Elon Musk. I kind of like that maverick, kind of bold, brash, a little bit egotistical kind of elements in it. But I wouldn't have fancied doing the due diligence on SpaceX. One thing which could be useful, Gavin, in terms of literally the first-time founder is, could you just talk a little bit about the data room and kind of the structure and the process? that goes around that. I know it's something we're both familiar with and we take it for granted, but again, we've done a couple of due diligence exercises recently, and the founders had no idea or understood the concept of the data room, the process that goes on through that. So again, just share a little bit of experience or anecdotes from yourself with that.
Well, that's a good point, because not every business, especially the early stage businesses, have a data room. Quite often things are just passed over email, and things can be quite slow if it's set up in that way. So it's great to have a data room set up, and you could use something like Google Drive just to drop key docs for the business in. And what would you put in there? Well, you'd have the financials, the P&L, the balance sheet, the cash flows. You could put in the legals. You could put the existing documents if you've got investors already, or the documents you use to incorporate the company. You could have the cap table, so an investor can see how much the founders still have of the business and the management team. Other things would be things like the customer contracts, if you track key metrics for the business. So it's really all those different areas, so that an investor can come in, access that quickly, and that will just save you a lot of time as well, because one of the downsides about due diligence is it sucks a lot of time out of the business for founders and CEOs who have to engage with investors on a daily basis once you get into due diligence. So if there's a good set of information already there that can be accessed online, I think that's great. It will reduce those phone calls and those meetings to some extent. I think obviously you need to, that's just the dry information, that's just the tick box stuff, but obviously you'll still be doing the meetings and the site visits. Investors will still be coming to visit you at your offices, speak to the team, etc. But yeah, having a good solid data room will serve you well, and you can then use it for if you're doing multiple rounds of investment, then you can keep adding to that over time, and that's the way to go.
So obviously setting up that data room, and I know some of the ones we've done, sort of where sort of documents have to be prepared for that sort of thing. What sort of pitfalls, just from your guys' experiences, have you seen where maybe startups weren't expecting certain information to be required, or certain processes that they weren't ready for? Is that something you've encountered commonly, or?
Yeah, it's a good point. It would be one of my key takeaways, really. I think Gavin kind of made a couple of references to it. I think for me, it's about being prepared. So, be prepared for that first coffee, be prepared for the start of the due diligence process, to engage with your investor, or there's loads of checklists available from accountants or lawyers or on the internet. Start to think about what information you need to present, which is in the agenda and structure of most due diligence exercises. So be prepared in terms of creating that data room, and also be prepared to invest a lot of your time. It is an investment in your business, but it's an investment in you. And I think you are an integral part of explaining the data, presenting the data, answering questions. There'll be information that's missing. There'll be information you put in that's wrong, that's contradictory. It does, as Gavin indicated, take a lot of founder time away from running the business. And I'd say prepare yourself for at least 3 months of that. I think the time commitment and the time investment is significant, and it will take you out of the business for days at a time. I don't think I'm overestimating that. Are you, Gavin?
No. Trying to think about James's question there, where people get caught out and what they haven't got. If you're well organised, it reflects well as well for the business. You're not kind of, spending a long time looking for these docs as you go into a fundraise. You've already got them there. So you've already spoken to your legal advisors who set you up at the start, and you make sure you've got those docs first of all. But I think on the financials, things like forecasts, it's good to, if you haven't got financial expertise in the business, it's good to get somebody to help you there, maybe a part-time FD, financial consultant who can build you a good model, a good forecast model, and something integrated, P&L, cash flow, balance sheet, all integrated, so it all stacks up. That would help. But you'll be surprised, you'll have a lot of the information that perhaps an investor's looking for. So if you've done sales pitches to to companies to try and get them on board as a customer. You could drop your sales deck into that data room, because then you can see, the investor can see, well, this is how he sells the business to a prospective customer, and that's really insightful. Actually, I quite like to see that. It gives you another perspective. So rather than the founder, trying to dress up the business and show the investor what he thinks the investor wants to see, you just see that. You can see that sales deck that they take out to different customers is a good starting point.
I think it's worthwhile, folks, going back and listening to the podcast with John Davidge as well, because often you've got founders who perhaps haven't got all the legal stuff sorted, the shareholder agreement and all that sort of stuff. The other thing as well is kind of, show your skeletons. Disclosure is a key part of the investor process, and day one, be upfront with everything. I think get on the front foot. The sales deck's a great suggestion, Gavin. This is how we present ourselves to customers. But any skeletons in the cupboard, wrangles with former employees, disputes with early customers, any contentious issues, get them upfront day one, because it's about creating trust. And also introducing certain members of your team. I think the investors, looking for is this a team that can take this business forward as well? So, I think there's been lots of good stuff we've talked around on this. I think it's a fascinating process. I always enjoy it. I enjoy it more when I'm helping founders get investment now than when I was on the other side of the table, because it was just a time commitment. When we were raising money, you have got to look at that as a full-time project and convincing investors, and it is about creating trust.
Yeah, it can take, like you said, it can take a CEO out of the business for quite a while, these processes, for sure. So, the better organised you are, the better it will flow. But, I think in due diligence, we haven't talked about the sort of softer side of it as well so much. I think, a lot of it is just you touched on it earlier, just thinking, can we work together with these people? Do we believe in them? And just spending time to understand them as sort of human beings is really, really important, because you're going to spend a lot of time together in the future. You're going to, aside from the monthly board meeting, you probably speak quite regularly the other side of investment. So it is really important that you click and you've got that shared vision, shared understanding.
Yeah, and I think it's quite, I have a phrase, taking other people's money changes everything, because it's no longer just your business. You don't own 100% of it. If an investor comes in, takes 10, 20, 30%, they've got a voice. They've got a seat on the board. They'll have a voice on directing strategy. You have to engage them on major decisions, but you should also use them as the sounding board. And again, I know that the Maven model is you kind of want representation on the board, or you have a non-exec representative, so that the people side of it is really important. Go for a beer, get to know each other. Have they got family? What do they do in the spare time? Hobbies, sports? You've got to create that personal connection, because they're going to be part of that journey for you for quite some considerable time. And you want to get on with people, but you've got to be able to exchange views. You've got to be able to have a frank conversation, but not fall out. So, it's not just the investor's money; it's the kind of the personal rapport and engagement. I think the due diligence process works both sides. I know we've done projects with you, Gavin, where you've got some hardcore founders, and you think, are they going to listen? Are they going to take advice? Are they going to take on board some of the thoughts? Because you've got, as you said, 15 years experience. You've packed in that much knowledge and insight from situations that founders can learn from investors. So you may know what you want to do with your business, but you can learn from your investors, because they kind of touch so many different flavors and size and shapes of businesses that use their experience, pull them in.
Absolutely.
So I think in terms of this podcast, because I think there's so many aspects to the DD that we could do, multiple episodes just talking about how a startup can go from going to doing its first round or Series A round, and what they need to be able to do, and how what you guys look for. But obviously, we've only got about another 5 or so minutes left of this podcast. I'd sort of like to finish by asking, what if you were to give one piece of advice to a startup who was about to send their deck to Maven or about to go through their due diligence process after that first couple of coffees, what would that one key piece of advice be that you'd want them to listen to or be prepared for?
Ooh, it's a big one.
Well, you think, Gavin, I'll go first. I think it's be prepared for what you're about to enter into. Getting investment is a really pivotal moment, so you need to be prepared for it. Prepare yourself personally, prepare the team and the data room we've referred to, collect that. So I'd almost say you need a 2-month pre-DD planning, but talk to your investors, look at the experience of other people, get yourself ready for this, because it is going to disrupt the business and it's going to be quite frustrating for founders. But to Gavin's point at the intro, every founder we've worked with and every due diligence review we've done, the founder has said, you know what, I've actually learned something about my business as well. So it's an investment of time in yourself at the outset, but it is actually a positive experience, assuming you get the investment, of course.
I think one bit of advice is be realistic about valuation, about what your business is worth, and also be realistic about the forecast that you're presenting as well. Don't just, send out the standard hockey stick forecasts. Really think about, can you deliver those? Are they achievable? But yeah, be realistic about valuation, because if there isn't substance to why your business is worth 10, 20 million, then it can be a bit of a turn-off, I think, for investors on that side of things. So I think just be a little bit cautious there, I think. Obviously know the worth of your business and what you've put into it, but just be a bit cautious there, because if you don't reach an agreement and you go off and you carry on with the business and then you come back 6-12 months later, don't forget the investor will have seen how you've done over those 6-12 months. I think if you go in and you're honest and transparent from the start, I think that's the way to go. But yeah, I'd also say don't lose a deal over try not to lose a deal over valuation, because if all the investors that you go and see are telling you a similar thing, then I think it's probably the right value that they're telling you. So don't lose a deal over that. Move forward with one of those parties, because like I say, if you come back in 12 months and you haven't made a good job of it, then you might find that those investors have gone off and they've found other companies to look at and invest in. So yeah, just be realistic. I think that's when the partnership works best between venture capital and founders.
I think that's just about it for this week. So thank you very much, Gavin.
Yeah, thanks, Gavin. Some good insights there.
Yeah. I didn't get a chance to tell you my most interesting site visits in my due diligence, actually, but perhaps we'll save that for another episode. Yeah. The trip to the craft. Yeah, the trip to the craft brewery at 10 o'clock in the morning to sample the products. All perks of the job.
I think we'd happily have you back for another one, Gavin. So just in the meantime, if anyone wants to get in touch with you, they've got a pitch deck or want to start looking at funding, how can they get hold of you?
You can access the Maven website where you can apply directly. Or you can contact me on LinkedIn, or you can contact me by email, gavin.bell@mavencp.com. Yeah, and if you send me your pitch deck, we'll try and get back to you within a couple of weeks, really.
Brilliant. Thank you very much as well, Ian. So I think our next podcast, I think we're delving back to our roots and talking to Alexa and Eric about tech mistakes and overcoming them. So slightly different change of pace in the last couple of weeks from meeting founders and obviously due diligence. So again, thanks very much, Gavin. Thank you very much, Ian.
Yeah, that's great.
And thanks for listening.
I think that just about wraps things up here. If you have any thoughts or questions on anything we said today, get in touch, whether that be through our Twitter @RealTSF or email at hello@startupfactory.tech, or feel free to drop in for a coffee and a chat. As ever, thanks for listening.